It's not been as strong as the US earnings season. I mean, the US earnings season, another stellar season for the fourth quarter. European earnings season, kind of mixed-ish, I would say. I think 1% average surprise, which is not dire because the European economy was pretty weak in the fourth quarter, but it's not been a stellar season. But what you have seen through this season is a lot of companies announcing buybacks, as we've seen this morning.
Let me go back one stage before I ask you about buybacks. Yeah. Why is the earnings season more underwhelming in Europe? Is it just because we're not growing as much? Because I think to myself, these are international companies on the international stage fighting US, Asian, Middle Eastern companies as well. You know, it can't just be about where they're domestically based.
Well, about sort of 60% of earnings are outside Europe, 40% are in Europe. Europe was teetering on the brink of recession in the fourth quarter. So the domestic chunk did poorly, yes. Also, the euro was quite strong in the fourth quarter, and again, if you've got international earnings, you're making dollars, you're translating them back into European currencies, that's less helpful. Also, commodity prices and China exposure hasn't been fantastic either. And Europe has got a big slug of China exposure too.
Of course, yes, with those big miners and oil companies. OK, now, one other thing about the earnings season, part two for our correspondent Sylvia Morrow, is the fact that you pointed out, as Arabella was at the wall, so many European companies are mounting buybacks. What's going on?
It's absolutely huge. You've never really seen this before in 20, 30 years. European companies pay dividends, they don't do buybacks. But now you've suddenly seen a lot of European companies catch this trend of doing buybacks, and I think there's a couple of reasons for it. One is their earnings in the last few years have been reasonably good. They've got good balance sheets, so they can buy back shares, no problem. I think another reason is there aren't a lot of buyers for European shares at the moment. In the last couple of years, fund flows have been pretty weak into Europe. European companies see themselves as quite undervalued, particularly versus their US counterparts. So what do you do if you don't have buyers out there and you have a lot of cash? You buy yourself. So I think it helps boost ultimately earnings per share, helps improve your returns ultimately. And if you believe you're buying yourself cheap, why not?